Saving money feels safe, right? You work hard, you put some cash aside in a bank account, and you watch that number go up. It feels responsible. But what if I told you that this very habit, the one we're all taught is the key to financial security, is actually the reason most people stay broke? Yes, you heard that right. Just saving your money is a guaranteed way to lose wealth over time. In this video, we're going to break down why saving alone isn't enough and why investing is no longer just an option for the rich. It's a necessity for everyone who wants to build a secure financial future. So let's talk about what saving really does. When you put your money in a standard savings account, you're essentially lending it to the bank. They take your money, lend it out to others at a much higher interest rate, and in return, they give you a tiny percentage. We're talking maybe 1, 2, or if you're lucky, 3% per year. It seems like you're earning something, and your balance does creep up a little. But here's the problem, and it's a big one. That small gain is an illusion. It doesn't account for the silent wealth killer that's working against you 24/7. That silent killer is called inflation. Think of inflation as a sneaky little monster that nibbles away at the value of your money. Every year, the cost of everything, your groceries, gas, rent, coffee, goes up. That's inflation in action. The official target for inflation is often around 2 to 3% per year, but lately it's been much higher. Now, let's do some simple math. If your savings account is paying you 1% interest, but inflation is running at 3%, you are actually losing 2% of your purchasing power every single year. Your $100 in the bank might become $101, but the stuff you could buy for $100 last year now costs $103. You have more dollars, but you can buy less stuff. You are getting poorer without even realizing it. Over 10, 20, or 30 years, this effect is devastating. It's like trying to run up a downward moving escalator. You're putting in the effort, but you're either standing still or more likely going backward. This is why saving alone will keep you stuck. Your hard-earned money is literally melting away like an ice cube on a hot day. This brings us to the crucial point. Investing is not optional. It's the only way to fight back against inflation and actually grow your wealth. So what's the difference between saving and investing? Saving is about storing money for short-term goals or emergencies. It's about safety and liquidity. You need an emergency fund, absolutely. But investing is about putting your money to work for you. It's about buying assets, things that have the potential to grow in value over time and generate more money. Think of it like this. When you save, your money is just sitting there, losing value. When you invest, your money is out in the world working, building businesses, and creating value. It's an active participant in the economy. You might be thinking, but investing is risky. I could lose everything. And yes, there is risk involved. Unlike a savings account, investment values can go up and down, but the biggest risk of all is not investing. The risk of letting inflation eat your savings alive is a certainty. With investing, especially over the long term, the odds are heavily in your favor. Historically, the stock market has returned an average of around 10% per year. Compare that to the 1 or 2% from your savings account. That difference is life-changing. It's the difference between just getting by in retirement and living comfortably. Let's look at a simple example. Let's say you save $100 a month for 30 years. In a savings account earning 1%, you'd end up with about $42,000. Not bad, right? But now, let's say you invested that same $100 a month and earned a conservative 7% average return. After 30 years, you wouldn't have $42,000. You'd have over $114,000. That's more than double the amount from the exact same contribution. This is the power of compounding, where your returns start earning their own returns. It's the most powerful force in finance, but it only works when your money is invested and growing faster than inflation. So how do you get started? It's much easier than you think. You don't need to be a Wall Street genius or have a ton of money. You can start with as little as $10 or $20. The key is to invest in something called a low-cost index fund or an ETF. These are baskets of hundreds or even thousands of stocks, so you're automatically diversified. You're not trying to pick the next big winning stock, you're just betting on the overall growth of the economy, which has been a winning bet for over 100 years. You can open an account with a brokerage firm online in just a few minutes, set up an automatic transfer every month, even a small amount, and just let it grow. The most important thing is to start now. Time is your greatest asset as an investor because of compounding. The longer your money has to grow, the more powerful that growth becomes. To wrap it up, saving money is a great first step, but it's just that, the first step. Thinking of your savings account as your main wealth-building tool is a financial trap. Inflation will constantly erode its value, ensuring you never get ahead. The real path to financial freedom is through investing. It's about making your money work for you, outpace inflation, and build real, lasting wealth over time. Stop letting your money sleep in a bank account where it's slowly losing its power. Put it to work. Make it an active part of your financial future. It's the single best decision you can make for your long-term prosperity. Thanks so much for watching. If you found this helpful, please hit that like button and subscribe for more content on how to build your wealth and achieve financial independence. Let me know in the comments if you've started your investing journey or what's holding you back. I'd love to hear from you. See you in the next video.